So this is a monthly series, and our sponsor is First National Rio Grande. This is Heather Johnson. She's a vice president at the bank. This program was actually developed by the FDIC and the SBA, and only financial institutions can teach it. So we partnered with First National Rio Grande so that we could bring this to all of our tenants and the community at large, the small business and startup community at large. So they're free. You're welcome to join us every single month. If you visit either the FatPipe ABQ website or the biosciencecenter.com website, you'll see these events on our calendar. You can register, and we'll be here. If you miss it live, you can also watch it on our YouTube channel, which is FatPipe ABQ on YouTube. And we also have the participant guides on First National Rio Grande's website and via our YouTube channel. So you can go back and watch the sessions you've missed. We hope that you guys will come. We appreciate you coming in person because this is a very interactive course, and the questions that we ask might actually be valid for the people watching at home, and so they get to hear and listen what we're talking about, and you get the expert and the expert advice. She'll answer actually questions and problems that you're having for your own business right here, so it's very cool. So thanks for coming. Take it.
Okay. We have a lot of new faces today, which is really exciting. I'm Heather Johnson with First National Rio Grande. I've been in banking since 2001. I primarily started in retail, working in helping people open consumer accounts, but it wasn't enough for me, and I decided I wanted to help businesses too. So a couple of years ago, I decided to learn how to do commercial lending, and now I'm a commercial lender with First National Rio Grande. We're a local bank here, and I'm on Mountain in Old Town. And I'm also a small business owner with my husband. And so this course has been really beneficial as I go through it myself to learn new things, and I've learned so much from just the attendees at these workshops who've brought up questions that really make me think. So while Lisa says I'm the expert, I'm more a facilitator of the discussion. So I encourage all of you, if you weren't at the financial management class last month, to check it out on YouTube and download the participant guide, because it really feeds into today's class and what we'll be learning. They're standalone, and I'm glad you all came, but I recommend you go back and look at that too, because I think it might fill in some things that maybe you have questions about. So without further ado, we'll get started, because there's a lot of material today. And this one's kind of a fun one, because you all get to be the banker providing advice to a company who needs help with their cash flow. So that's what today's session is all about. Before we get started, in the back of your workbooks, there is a pre and a post test. I'm going to ask you all to take the pre-test for a few minutes to kind of see where you're at. This is just for you. And see what you know, and then we'll do it again at the end of the session. So today's agenda includes a case study of Bob and the wired cup. Bob set up a coffee shop next to a university, and he has some questions about if he can pay himself, if he's going to have enough cash to get through the summer when there aren't any students, and things of that nature. So we'll be reviewing some of Bob's financials to help provide those answers to him. I really encourage everybody to interact so that we can get some good discussion going. This is an open. You can bring up your questions about your business if you have any, and we can try and help find some ideas for you. And then at the end, you'll take the post-test again and also fill out the evaluation, please, so that I can improve each session. So today's learning objectives is to describe the purpose of cash flow management in a startup small business, assess a cash flow cycle, and make some cash flow projections, and describe how a cash flow statement can help assess and improve the financial health of a startup. So, we'll go around the room and do some introductions and discuss where you feel you might be on the cash flow cycle. So, I would say I'm intermediate. I know some, but I still have some questions. And let me tell you why this is important from a banking standpoint, is because when you come to ask for money, there's two things that are really important for us to know. Why you need the money, and where are you going to get the money to pay us back. And this all goes back to the cash flow cycle. And frequently when I'm trying to get loans approved, my approver is saying, well, tell me about their cash flow cycle. Tell me about their cash flow conversion. Where are the holes and where are the issues? Because you might be coming in to say you need working capital, but understanding you need working capital because someone isn't paying you because your accounts receivables are drawn out, that's the real reason you're coming in for the loan. Or maybe you're coming in for a building loan, but to really understand where your cash is moving and how that's affecting your business, that's what we're going to be looking at today. So, I'm an intermediate. I still have some questions, but I know some. Where would you feel you lie on the spectrum? And give us your name and kind of a little bit about yourself.
All right. My name is Dale Amico. I'm an IT guy. I'm starting a company called Elite Information Services. I provide managed services for small and medium-sized companies. I also do data recovery and data destruction. As far as cash flow goes, I'm just now starting out. I've been in the corporate world for a long time, over 20 years. So I would say intermediate from that perspective, but you know, as a startup, I'm a very beginner. You know, I have no idea. You know, with a big corporation, you already have cash, you already have customers, you already have everything.
Yeah.
People don't even know I exist right now. Working on a website, marketing, and things like that. So it's pretty interesting. It's pretty exciting.
Cool. Thank you.
Thank you.
My name's Jean. I've been attending all of these. I'm a previous retail gift shop owner. Closed that after 10 years, but I was a corporate citizen for 22 years before that. So probably in an intermediate zone, and always want to learn something new.
Eve?
I'm Eva Fain, and I started a small business, and like others, I worked for the corporate world for 35 years, and so part of that was in accounting. But as far as running my own business, I'm a beginner, definitely, because I used to do cost accounting for the phone company. Has nothing to do with the diabetes educators. Nothing at all. I mean, it's a whole different world.
Okay. Thank you.
Hi, my name is Rachel, and I have over 20 years of experience in information technology. I just recently left the corporate world. I'm looking at a new endeavor for a small business startup. I want to work with organizations to get the best return on their investment in IT purchases. I would say I'm a beginner intermediate area. Hi, I'm Melba Martin. This is the third time I've retired. I spent 27 years in the United States military. Most of that as reserves. I retired from the state of Louisiana as a teacher administrator, and I just retired from the state of Arizona as an administrator. I've inherited property, etc., and I've had a business on that property for years. But now it's time for me to really do something with it. Not just play with it, but to actually make it profitable. So that's the reason why I'm here, and I intend expanding into the state of New Mexico also.
Becky Greeley. In my former life, I was an operations manager for a small law firm. So I would say from that standpoint, I'm intermediate. I helped us to improve our cash flow, improve our collections, those types of things. So I have a pretty general understanding of cash flow. As far as my own purposes, I'm not even at the stage yet of starting my business. I'm in graduate school right now to get my degree and plan to open up an education center in the future. And so I'm really trying to just get some foundational education here as to the proper way of starting a business before. I've done the whole start a business, blow it up thing before, and I'd rather that not go this way. So kind of like what you were describing, although I understand cash flow in an existing business, I'd like to learn how to start things off correctly and in a strong way.
My name is Jack Maestas. I'm co-owner with my sister of Casa Verde Spa. We've learned a lot about cash flow and how important it is. We've worked with different consultants and different coaches and read books, and it's just such an important thing for the business to to have that stability and be able to stay afloat through, like I'm sure people go to you at your bank for loans when they have a downtime or something. We're very much transitioning from spend money to make money to have stability and be secure and pay off debt and that kind of thing, just to sleep good at night and be profitable. So that's kind of that's why we're here. So, and it's amazing to me. I read books, and so many entrepreneurs are different. I'm in the business because my dad and mom opened the company, but entrepreneurs by spirit are very, like, they see something that looks impossible and they're like, oh, I can do it. And so to me, anyway, in the book, is so many get overextended and get in trouble because they just have this confidence that to me is amazing, but can get you in trouble. So cash flow is important, and so that's what.
My name is Donna Rodriguez, and this is my brother Socorro in Casa Verde. I would say I'm intermediate to possibly expert, but still have questions. And with that being said, knowing and doing are two different things. Like, I am closer to the expert side on knowing the information, but probably not in doing the information. And that's about it.
My name's Lisa Atkins. I run the Bioscience Center at FatPipe ABQ. I know enough that I needed to hire a financial advisor. So Misty Witt is she's our CFO and assistant director. But I'm also starting a new business this year. And my partner is very strong in finance and back end. So he'll manage all of the books, but I need to know enough to help him run the business.
I'm Monica Walters. I own Shutter Booth Photo Booth Rentals, and I have 15 years as well in the corporate world and managing large accounts with lots of money, so that was easy. It's harder when you don't have that large account to manage. So I would say beginner to intermediate, and some of it is harder because I take deposits, and then you really, it's like a matter of, should I be holding that somewhere until that event happens and those expenses come? Or is it okay to just use it as you need it or think you need it? So those kind of things is really what I'm looking for.
Okay. So if you guys want to turn to page 4, thank you everybody, and we'll learn about Bob and the wired cup. So Bob recently opened a new bakery cafe, the Wired Cup. The cafe has a great location in a small college town. To get started, Bob invested $30,000 of his own money, received a $20,000 loan from a commercial bank. He spent $45,000 on startup costs, leaving $5,000 to run the business. The Wired Cup is already popular with students, university staff, and neighbors, and everyone loves the coffee and baked goods. A college dean has started to order croissants for the faculty dining hall, and Bob is building a great new business. However, Bob has concerns. He's not yet paid himself, and he wonders when he can. The $5,000 is almost gone. Given that his key customers are students, he assumes many will go home over the holiday breaks and the summer, and questions Bob is now asking is, how will he pay his bills if there are fewer customers? Will he have enough money to ramp up again in September? Should he buy in bulk to reduce costs? Will suppliers allow Bob to buy on credit, or does he still have to pay cash? The good news is Bob is thinking ahead. He has time to find some solutions. As we reviewed the Wired Cup's cash flow issues, you'll be able to apply these concepts to your own business. So, Bob has provided us with his opening balance sheet for the Wired Cup. So let's take a look at that. That is on page 5 of your workbooks. So he has $5,000 in cash. Now, he's listed all of his pre-opening expenses, which might just be listed for this purposes of exercise. They're showing us how much cash went out the door to get things started. But these might be listed as prepaid expenses, deposits for his lease, bank charges, cable, internet, all of those things. And then he had to purchase kitchen equipment, leasehold improvements on the building. So that cost him almost $30,000. So total assets in his business is $50,000. So how did he get that $50,000 to start? He has his bank note of $20,000. Now, he has broken out, and this is good for cash flow, how much that $33.71 is the amount he has to pay over the next 12 months. So he's broken out what is due, so he knows I have to pay over the next year $3,300, because that's cash out the door, right? And then he's left the rest of it as a long-term liability that after the end of the year, he'll owe $17,000. This is good to do at the beginning of each year, is to say, okay, how much debt am I going to be paying over the course of the next year? Now, this $3,300 doesn't include interest. That's an expense. This is just the principal he's repaying back. In the first year, it's probably mostly interest with a little bit of principal, but that's important to note too. And then he supplied $30,000 in owner's equity or capital. So does anybody have any questions about his opening balance sheet? And it balanced, which is very important. I don't, we laugh, but it happens. So it is important that your assets equal your liabilities and your equity. And then down here, they assume that the loan at $20,000 is 5 years at 8.25%. There's lots of calculators online that can give you amortization schedules and break out principal and interest if you need to know how much you're paying each year. And they're all free. You can find them.
So there's nothing in accounts receivable because this is his opening balance.
This is his opening balance sheet, yes. And given that he's a coffee company, he probably doesn't have many accounts receivable because people come in, buy coffee, and walk out the door. If they don't have the cash, they don't get the coffee. But he might have accounts payable where he owes his vendors for the coffee, for the bread, for everything that goes into the coffee. That's not on here because it's the opening one.
Well, I guess because it's the opening sheet.
Yeah.
This is what I need to do for my business.
Right.
But I postponed until.
So about the debt, it takes effort to obtain a small business loan. One of the things they'll want to know is why you need the cash, which is good to understand where your cash is going when you go to the bank. So that's another reason why this class is important, is truly understanding why you need the money when you're asking for it. Your credit score will directly influence your ability to get the loan. Talk with the bank before you need money. Go in and start developing a relationship with your banker so they can get to know you. Avoid using credit cards to finance your business. It's an expensive way to get money. It's an easy way, but it's an expensive way. And certainly shop around. A lot of them now offer 0% for the first 12 months. But be really careful and know, as we go through and think about your cash flow projections, can I truly pay this off in a year to take advantage of that 0% interest? And how much cash out the door am I going to be paying in order to do that, to pay it off in that shorter time frame? And then as you do other classes here, we can help with that.
Got a question.
Yeah.
The second bullet point talks about credit score.
Mhm.
My question, does it matter whether you're a sole proprietorship, whether you're LLC or S Corp?
No.
No, okay, so if you're a corporation, let's say you're an S Corp and you've got different people either investing or involved, are their credit scores taken into account?
It depends on how much they owe in the business.
Okay.
Typically, SBA and a lot of banks look at a 25% ownership as being a majority person in the business and look at guaranteeing a loan and say we need to pull credit on them and what's the credit score of that person as far as whether or not they're that involved in the business.
So as a banker, would you guys want to see the articles of incorporation, all that
Oh,
stuff
yeah.
to see? Okay, great, great, that's good to know.
Yes.
So, great, thank you.
And the next class
Oh.
is about what type of organizations to set up. If you should do an S corp
I should have taken that. Yeah, I already did all that stuff.
Okay.
Well, and I mean, I guess a lot of folks have steered me to be an LLC, right? But it's still my FICO score, basically, right? My score.
Right.
It's
It,
my LLC.
there is some separation when you have corporations and LLCs when it comes to liability. But from a banking standpoint, you're the owner of the business, and we're looking to know that you're invested in the business and you're willing to back the loan. So we're still going to look at your personal financials, your personal credit score, and ask you to guarantee the note so that if the business fails, then we're going to look at you personally and say, how can this person repay us?
So that is
So.
pretty much a given.
Yes.
I figured it would be.
Mhm.
I mean, you can't sidestep your creditors.
Mm-mm.
Well, that is part of it. I mean,
Yeah.
it's-
No, yeah.
yeah.
So,
And I realize that we're probably gonna discuss this next time because of the topic, but an LLC is basically because of the limited liability, right?
right.
Got it.
Well, I wonder, so they said to save malpractice insurance premiums, I don't know, I've never had a case against me, but the LLC is better.
Okay. And so there's different, in industries, there's different reasons to go different ways.
But I've
So.
also been faced with changing the name of my business to my personal name because the malpractice company told me if you're doing a DBA, doing business as, we won't cover you.
Interesting.
Well, that's because a lot of folks work under your license if you're an RN or they are a doctor.
Oh, okay.
And so they would essentially be underwriting the business.
Mm-hmm.
How do you like that? I didn't like it at all. Well, no, it's a pain. Yeah. So there she goes with
Cash flow. So, we're going to be looking at three views of cash flow: the cash conversion cycle, the cash flow diagram, and then a cash flow statement. It's all kind of three different ways of looking at the same thing. And so it kind of depends to you which one makes the most sense. So the first one is the cash conversion cycle. And this is really important to understand, and more important to be able to explain to somebody else who might be wanting money. So your cash conversion cycle is the business pays for raw materials. So you've now spent money out of your pocket. The business makes the product, or perhaps it's consulting, and then you sell the product. So from the time that you have put the cash out for the product till the time you get cash in is your cash conversion cycle. Some companies are very short, perhaps a coffee company where he buys bread on Monday and he sells it on Monday afternoon. Some are much longer, construction firms where they have to buy materials but they're not going to get paid for 60 to 90 days. And so cash crunch becomes a big deal for them. So understanding how long it takes from the time you pay till the time you get money in is very important for your personal business. Does anybody have any questions about this particular slide?
Would you look at that in terms of credibility, how long it takes for the person to get? For instance, if I contract with the government, they take 60 days minimum to pay.
It's not a concern of credibility. It's just knowing that you understand it's going to take you 60 days before you get paid.
Right, you need money.
Then that's why you're coming to ask for money, is because you realize it's going to take 60 days before you get paid.
So do you guys mainly go off of, that type of scenario, or is it more of hey, my terms are 30 days. So if I have terms in my contract that says 30 days, yet still they take 60, even though you charge the 1.5%, people still take forever to pay.
Yeah.
You know, how do you guys see it from the banking perspective?
Well, if we understand, and a lot of times it depends, if we consistently see that your vendors are not paying you for 60 to 90 days, then perhaps there's an issue that you're not focusing on your receivables and you're not collecting them in a timely manner. And so I guess perhaps from Eve's question of credibility is, are you focused on getting the cash back that somebody owes you? Is that something you're paying attention to? And we can look, when we look at financials over 3 years, we can see, are your receivables stretching where in 2014 maybe you were collecting them in 30 days, and now 3 years later you're now collecting them in 60 days.
Yeah.
Why?
Yeah.
And it could be because, well, I changed my vendor mix, and rather than doing consumers where they pay within 30 days or when they walk out the door, now I'm dealing with business contracts and they're not paying for 60 days, which is why I'm coming to you to get a line of credit, because I've switched who my customer is. If it's because, well, I wasn't really paying attention to accounts receivable, and so I wasn't really collecting them, that's
Yeah.
kind of a different situation.
Well,
but understanding why that is,
Yeah.
and knowing what the story is, that makes a big difference.
Yeah. Yeah, and sometimes companies get stretched thin, you
Yeah.
hire on people, so you're not, you don't have a collections company or something like that, so that could, factor in.
Right. There's different reasons. So.
As far as you're the bank and I'm not paying my loan payment because of my accounts receivable,
Mhm.
so what, does one go in and explain it? I mean, the federal government really does not pay any sooner than 60 days, is what I've been told.
Well, I think explaining to your bank up front how you're going to be paid and when is very important. And if we're lending money on accounts receivable, which happens, then we're going to ask for your monthly reports or quarterly reports to show what your accounts receivable looks like. And if we see ABC company has been sitting out there for 90 days, we're going to call you up and say, Eve, you have this large collectible for account receivable for $100,000 to ABC Corp. What are you doing? What's the conversation? Have you been talking to them? And if you go, oh, I didn't know, that's a lot different than I've been calling them regularly. We've been having conversations. We're doing a workout plan. They're going to start paying me $5,000 a month in order to pay this back. Shows you're on top of the situation. So that's kind of, does that answer the question?
Well, I don't want to get you bogged down in the scenarios in the health industry.
Yeah.
But essentially it isn't. When
Well-
you see your doctor, the insurance company doesn't pay within 30 days.
No, and
And
we,
you can disallow
Mhm.
the charges and question them and drag it on for 90 days to 6 months.
mhm.
No, I
Don't
know,
do
it
any
sounds
business
really.
with
But there's no negotiating with the insurance company or with the federal government. That's just how they do business.
Right, in which case the planning and the cash flow projection sheets that we're going to be working on become much more important when you know you're not getting paid 60 to 90 days.
So
And
just-
to realistically put, you know what, I don't think on this contract I'm going to get paid for 90 days even though I've given them 30 days. To include that in your cash flow projection, to think, you know what, historically I'm noticing this company pays 75 days. So I know if I get this contract in March, it's not going to be paid for 75 days, and then you put it in your cash flow projection that month you think you're going to get paid. So looking at that and then adjusting your business accordingly to when you actually think the cash is coming in.
Yeah, I mean, I do hear people offering discounts for same-day payment,
Mm-hmm. Yep.
but life is the way it is.
Okay, on page 7 in your workbook, I really liked this particular diagram. I thought it was I like pictures. So I thought it was a good representation of where your money is, because it's a flow. And the question is where? So up at the top, we have the things that are flowing into your business. Your sales pump, which brings you customers, lenders, which provide cash through debt, and investors, which provide cash through equity. So those are all the places that you could potentially receive cash from. So then where does that cash go? Goes into the center, potentially goes into accounts receivable, where it sits and you have collections, and then goes into your available cash. The accounts payable are bricks, because those come out of your available cash flow that you're supposed to be paying out. Some ways that you lose cash are through obsolescence. Maybe you purchase some inventory, and you purchase hair care products that all of a sudden nobody wants to buy. So now all of a sudden you have inventory you can't move. Because the styles have changed from one quarter to the next. I'm trying to think of some other examples. You know, purchasing retail inventory. One Christmas you think that the big thing is going to be teddy bears, and then the next Christmas you buy too many teddy bears because everybody wanted puppy dogs. So those are all ways that cash can be lost, is sitting in inventory. Shrinkage or inventory that walks out the door potentially. Yeah. The one everybody wants to focus on is this ECFPO over here, that shower head. You want a big shower head because that's money going to you, the owner. And so that comes out selling, administration, and general expenses. And then off the bottom, you have other things that you can't really control: payroll tax, sales tax, and debt. Those are all drains on your cash flow. So, and on those ones, they very appropriately didn't put a spigot, because there's no way to kind of shut those off.
You can, but it's illegal.
Yeah.
What now?
No spigot.
There's no spigot to turn off. You got to pay your payroll tax. You got to pay sales tax. There's nothing you can do about that. And debt. I mean, the only way to turn off the debt spigot is just not to get any. But debt isn't always bad. It's just you need to learn how to use it and when you need it appropriately. Income taxes, depreciation, those are all ways that cash kind of goes out. And looking at leasing, so they have on the left, you have your leasing versus fixed assets. Leasing equipment can be less expensive than purchasing it up front, and require less cash flow. But you have to decide, is this something that maybe I might use for only a year and then I'm going to get a new one? Or is this something really long term in the business that I don't want to be turning over quickly? So I want to purchase it and actually use the cash or the debt to purchase the asset. So what questions do you guys have about this? There's actually a lot of information in here. On accounts receivable, they also have a spigot going off for bad credit. Those accounts receivables that you're just not going to collect. At some point, you just have to write it off as bad debt and not do business with them anymore. It's a lot of information to digest. Let me see if there's any other notes that they outline here. So the valves are all decision points that you can make a decision on, which is why, like I mentioned on payroll tax and sales tax, there's no decision on those. Inventory, you spend money on raw materials, labor, and other direct costs to produce and product to sale. Assuming you're producing a product, the same principle applies for services as well. If you spend a lot on inventory, you've tied up all your money until you can sell that inventory and turn it into cash.
I got a question on that. So,
Sure.
As a banker, do you look unfavorably upon large inventories?
It isn't that we look favorably or unfavorably. We look more at, is it appropriate for the business? And is it, again, looking year to year, if we see your inventory consistently grows, is that because you're buying too much of the wrong product and you're not moving it? Or is it because your sales have grown and you need more inventory to keep up with the sales?
Okay. All right. So you guys do a ratio looking at inventory versus sales.
Mm-hmm.
Okay. All right. It's good to know.
And so we look at, and to look at your cash flow, we look at how many days you have in your receivables. How many days is it taking you to get paid? How many days approximately do we think is in your inventory? How often you're turning it over? And how many days are in your accounts payable, or how long is it taking you to pay? And you can look that up. It's not in here, but if you want to call me, we can kind of go over how to look at that. So then you can understand truly how long it's taking your cash to come in and out of your business, the cash conversion cycle. So that's what we're looking at. And looking year to year, is that growing longer, or is it growing shorter? A shorter cash conversion cycle means you have more cash to buy and spend and cover your expenses. The longer the conversion cycle, the harder it's going to be.
Got another quick question.
Uh-huh.
The fixed assets, you have
Yep.
a broken line going to depreciation.
Mm-hmm.
Explain that. What does that kind of signify?
Depreciation isn't really a cash item, so to speak, but it is. It affects your cash. It affects your expenses. So that's why it's kind of a dotted line, because theoretically, by depreciation is you're losing cash year over year by what you've used in the product, right?
Yeah.
When you buy a car, your depreciation is how much you've used of that product. And so while it's non-cash, it is cash because eventually you're going to have to replace that product at some point.
True. But you do see tax benefits with writing off the depreciation.
Oh, yeah.
Wait, and I remember depreciation went somewhere else on the whole profit and loss of the year, right?
It goes in, it's an expense on the income sheet, in your P&L, yeah.
Even if it's a perfectly good computer. I'm thinking, you know,
Mhm.
Yeah.
computer equipment has gotten where it used to be a lot of money to buy a PC and now it's $300, right? And so
Exactly. Yeah.
the cycle of a computer depreciation is probably, what, 2 to 3 years?
3 years typically.
Mhm.
So
Then it's considered worthless on paper.
on paper.
I have
In the
mine
tech world
50
sometimes too.
Not to see what you get.
Yeah, it doesn't get you
Yeah.
far. Surf the internet, that's it.
Yeah, no, I mean, I just bought one, it was great, it's better than, but,
Yeah.
yeah, I mean, I bought it because my super good one got infected, so, yeah.
Oh, that's
Yeah.
tough.
Well, no, it just can't be on the internet anymore.
Uh-oh.
It's inappropriate.
We'll talk after.
You guys need to talk.
We got sidetracked. over here.
Yeah, let's get off of the old computers, we probably have garages full of them.
Okay, anybody have any more questions about the picture? So the ECFPO stands for Excess Cash Flow from Profitable Operations. So that's what the ECFPO stands for on the shower head. And that's why you want a much larger one. So now we're going to actually work on a cash flow statement for the wired cup. So page 10. So this shows us how much money is moving in and out of the company each month. And this is different from profit and loss because you can show profit and not have any cash because perhaps you're showing your accounts receivable but you haven't gotten paid for it. So this is actually showing cash coming in and out of the company. You can also order inventory and not pay for it. So again, this is different. So you want to, if you know in August you're buying inventory, but you don't have to pay for it until September, you're gonna put your cash out in September as opposed to August, even though that's the month you purchased it in. So this is Bob's cash flow statement. So in the first column are all of his startup costs and cash out. He has the cash in of $20,000 from the loan and $30,000 in owner's equity. So he has $50,000 to get his company started. Then he knows his accounting expenses, advertising, the lease, insurance, ingredients, etc. So he's figured at the end of starting up, he's going to have $34,500. In August, and then he purchases fixed assets of $29,500, leaving him $5,000 to get started. So in August, his $5,000, he adds $25,000 in revenue, his sales tax, leaves him $31,563. Now, sales tax isn't really your money. So it's a good idea to keep it in a separate account that you move it to so that you don't accidentally spend it, because it's not yours. New Mexico collects monthly, which I think is good because you can keep it separated and you don't draw up big sums. But it's not your money, so it's a good idea to keep it separated.
So I have mine set to quarterly.
Okay.
And then, so now that I make more money than I used to when I first started, will they change it to monthly?
I don't know. I do not know how that works.
You
You
have
have
to
to
do
do it.
that.
There's a paper.
I took that class and you can go online and switch.
Do I have to?
No.
Okay, so I can always just leave it quarterly? It's just up to me.
But if
Okay.
you owe them a certain amount over 3 months, don't they start nagging you?
I don't know.
She's paying.
Okay, yeah, because I know when I first started, it was because I didn't make whatever that magic number was.
Right, I can.
If you had a payment over, I don't know, $750 or something in a month, you could make it quarterly instead. And so I was like, oh, sweet. For me, it's just a matter of I hate paying bills because I don't remember. So the less times I have to pay them, the better. But I didn't know if I had to change them now if it's more.
I
But
don't know.
Perfect. Thank you.
And then he estimates all of his operating expenses and cash that's going to be going out over the course of the month. His biggest ones are payroll, his ingredients, leaving him $2,300 at the end of the month. And he did this over the course of the whole 12 months. And we talked last time that it's a good idea to do this project once a year. And then monthly, you go in and you look at the last month that you had, and then you look at the next month to see where you're going and see if you need to make any adjustments. It's also a good idea, they call it the Goldilocks Effect, which is you don't want your cash flow to be so optimistic that everything's going to go perfect that it's unrealistic. You don't want your cash flow statement so horrible that you're overestimating everything, and then that's also not realistic. So it's hard and takes some fine-tuning and practice to come up with something that's just right and in the middle, and that's probably realistic. And to be able to pull, if you have a history of 12 months to see what your revenue is, that would give you a good idea of where to start. But if not, trying to figure out some realistic revenue numbers and expenses. Some you're gonna know. I mean, if you have a lease, you know what your lease amount is month to month. But payroll, you know, how are you figuring payroll and how are you doing your scheduling? Because if you know he's looking at his summer months of May and June, he's still estimating payroll at $16,800, but he's probably not going to have that many customers because school's out. So does he really need to have that much in payroll? Maybe he can estimate down that month and estimate more in the months where he's like, okay, Christmas, I'm going to be slammed because we're going to have more people coming in, those types of things.
But as far as his payroll expenses, so if he isn't paying those people, in other words, he lays them off, he's gonna pay
Probably you want to
workers'
have,
comp, yeah, or
well, but
something.
probably you'd want to have a
unemployment.
certain number of regular employees and then a
Right.
certain number of seasonal employees, and
Mhm.
therefore you're not having to lay anyone off.
Yeah.
That's the way, I mean, that's
Temp.
a tactic, yeah, but I'm thinking otherwise he'll get kicked with unemployment costs.
Mm-hmm.
And plus, you'd have to assume that these employees are probably college students that might go back home.
That's
Yeah.
who you want,
Yeah.
right, okay. So just, because it doesn't estimate, well, I guess it's in the payroll. We just don't see it broken down, how much you're paying in unemployment insurance, you know, all that.
Right. And
And
it's
have
up to you
employees.
how detailed you want to be. Again, it's the Goldilocks theory. Too detailed, you're going to get bogged down in it and never come back out. Not enough detail, you won't be able to make any good changes to affect your cash flow. If you just put revenue and expenses, cash at the bottom, then how are you going to be able to go in and tweak it? So you got to, again, come up with something good in the middle of what's a big important expense that needs to be broken out versus $50 in paper a month. Do you really need to break that out?
And this Excel would be fine for you.
Oh, yeah.
If I come to you for a loan.
Mm-hmm.
I mean, I don't want to learn, but.
Yes.
Maybe I can learn eventually, you know,
Yeah,
do
no.
advertising,
Excel is a great way to do this.
bootstrapping your business, you try
Yeah.
to keep everything out of your pocket, no loans, but.
QuickBooks also has a cash flow statement. I actually like Excel a little bit better because I think it's easier to manipulate for cash flow. But you can use whatever works for you. Do you use Excel?
I use Excel.
It's a little bit easier, isn't it?
Because QuickBooks, now you have to pay and it's in the cloud.
No,
I use
we
QuickBooks
still
for
use
other things, I
QuickBooks.
just don't use it for that particular.
We
Oh,
still
okay,
use it
you
for
still
our
Right.
cash
use it
flow.
For everything, yeah.
You can't get away without it.
Right. No, some
When
sort
you
of
get bigger,
accounting
you can't,
system.
right? You just-
Even when you're small.
Even
you
when you're
should-
small.
one
I'm
person,
small.
You should have QuickBooks.
And yeah, I had to have QuickBooks.
You had to go to QuickBooks.
Oh, for
Absolutely.
sure. There's no way to do it otherwise.
You can't mess it up. It's almost that easy.
And it's automatic, connected to your accounts, and then it just does it.
I need a customer. First, I gotta need a customer before we start thinking.
Okay, so now you guys get to put on your thinking caps. So, how could Bob increase sales revenue at the Wired Cup for his months that he's short on cash flow?
What can you do?
You run promotions,
Okay?
you know.
Deliver coffee and donuts to some companies.
Offer a delivery service,
Yeah, versus,
just sitting in his shop.
right.
Anybody else have any ideas?
Advertise the promotions.
Uh-huh. How can he show that on his cash flow statement, or what months do you think would be most important for him to look at to decide to do something like that? Summer?
Yeah, most of his advertising expenses are in August through October. So perhaps doing some sort of advertising push in like May or something.
Mm-hmm. And he still has cash flow in May before the students leave that he could pay for advertising for the summer.
And you can also try to target the camps that usually go on at the colleges during the summer months.
Good idea.
It's particularly for kids and other people, but there are a lot of camps and they do need for food services.
Mm-hmm.
Right, there may actually be a customer source that he hasn't thought of that'll end up expanding his business.
Mm-hmm.
Maybe change his product offering for the summer months that's not hot stuff to maybe cold stuff.
Mm. That's a good idea.
You know, ice lattes.
Yeah.
You know.
I feel like a lot of them have added tea offerings, so adding, some fancy iced teas or whatever.
Mm-hmm. Something to look at if he does decide to change his offerings, he'd want to look too at the expenses with that. If he does ice drinks, does he need to purchase a blender for smoothies? Does he need to purchase new equipment? And not that that would be a bad thing, but those are cash expenses to add to his cash flow, and when might be a better month to make those purchases than other months. That's something he could look at here too, right?
Right. Maybe.
So how could Bob negotiate a better deal with his vendors and suppliers? Does anybody have any ideas?
Or perhaps try to like negotiate with his, through his lease that he pays maybe more during some months and less during other months.
Mhm.
So might be open to something like that.
Yeah.
For other vendors.
No, it would be worth talking to them about.
He could look at his vendors because oftentimes some will offer better payment terms. So you may want to really analyze your vendors.
Mhm.
In my retail business, that's the first question I ask is what are my payment terms?
Yep.
So maybe that's not exactly what I wanted to buy, but I went over to somebody that allowed me to buy it so I didn't have to pay for it right away.
Just shopping around vendors
Shop
and
around for your vendors.
That's true too, and he's in the coffee business, so price of coffee goes up and down. So being, astute with that and understanding, hey, in the months that he has extra cash flow, maybe he can buy a little bit more coffee.
Mhm.
I don't know what the lifespan of coffee
Where to
is.
store it.
Right.
Yeah,
I mean,
exactly.
I keep mine in the freezer at home
Yeah,
because it
yeah.
does lose it gets
Mhm.
bitter. I think.
There might be a buying group that he can jump onto with other people that buy coffee.
It's true. Be able to leverage
And,
that.
leverage that.
Mhm.
And then I think you may need to look at his shop. I don't know how big his shop is,
Mhm.
but as in most places around the world, they're seasonal. And since this is seasonal, that he will have drop in sales, he can look at maybe shutting down part of the shop,
Uh-huh.
cut down on electricity, and trying to take care of those customers and cleaning, etc.
Mhm.
Again, I don't know
Mhm.
because I don't know what the shop is. So
Right.
it's hypothetical.
Well, he could reduce hours. Maybe during the summer he's only open 8 to 1 or 7 to 1, and he's not open afternoons and evenings because he doesn't get the traffic. So that would cut down on payroll. He's not laying people off. He's just not giving them the hours. So.
I'm chasing you, but we see those strategies, or we see
Yeah.
somewhere where we like the way the tea tastes, and you show up and it tastes different because they went with maybe a cheaper.
Well, and that's something to consider. I mean, why, as he's making these decisions, how does he think that's going to affect long term?
Kind of risky, actually, to switch vendors. Truly, I think for a company, you end up getting maybe a different product that people don't like as well.
Could be.
Yeah.
But also.
Only if you're Dion's.
Don't mess with the ranch.
Yeah, Dion's ranch dressing. There's a.
But also, okay, so that didn't work out well for them, but they also reacted quickly, and within 2 weeks they had it back on the shelf. So they knew there was an issue and they reacted quickly to it. So listening to the customers, if you switch your tea and it didn't go as well as you were hoping, then react quickly and switch it back, right? So don't just feel like, oh, okay, I'm stuck.
You know, and Dion's is a perfect model, a company that's built itself on students,
Mm-hmm.
DECA clubs out of high schools, and trained kids to do a service and a skill, right?
Mm-hmm.
And still manage, and it looks to be overstaffed, which is important when you're dealing with that age group because, they have challenges as well,
Mhm.
tests and whatnot.
Mhm.
But yeah, look how successful they have been.
Yeah.
They've expanded to Colorado. And they actually had food poisoning from their ranch. That's why they pulled it.
Well, again, they reacted to the situation
Oh,
to
yeah.
fix it. So
Very
we've
good.
talked about a few ideas where Bob planned for some seasonal up and down, changing his hours, trying to market more to other students. Is there anything else we missed about as far as planning his cash flow?
He could, instead of looking at what he could offer during the downtimes, he could look at what he could do to boost sales during his up times, so then he has more cash flow that can carry him through the downtimes.
Very good.
Whether that's another product more hours or something, or a lot of places like this are also adding the opportunity for other people to advertise in their locations, so like little bulletins or whatever in the bathrooms or whatever. So bringing in business or bringing in cash flow that
Free
way.
internet.
Offering free Wi-Fi.
Free internet.
Yeah, I mean, when you think about internet, I Free internet. There's not much internet in that area, so great.
So is it wise for Bob to use a credit card to offset cash flow issues?
No.
It could be.
Okay, now hang on.
Right.
Bob only has about 3 months that he feels he's going to be down, which is June, July, and potentially August. So while I'm not a huge credit card fan, this might be an instance where it's a good case to use it for a few months. But to plan and put that in his cash flow that come August and September, he needs to pay off whatever that balance is.
Yeah.
And to try and guesstimate what your balance would be at the end of that time frame so that you have the cash for it and how you're going to come up with that cash. Because it's a short-term line of credit for a small amount that could be used for him to support inventory during those needs. Now, I don't think he should rush out and put a whole bunch of fixed assets that are going to take a long time for him to put on his credit card. But for a short-term need, it's a solution.
I mean, he has not that much cash flow, right? I mean, we're looking at his balance of cash at the bottom.
Right?
So he could really sink his ship, couldn't he? Like,
Well,
18% interest rate on his credit card.
Yes.
I mean, if
That's
you
the
shop around, I mean, the credit now are at 2.45 for a 12-month credit card,
Oh, they
0%
are.
at Wells Fargo, so
So it might be,
you could easily get low interest for a good 12 months.
And then they might send you a little white paper in the mail that says,
And you can always transfer in the next
You sure
12 months
can.
if you have good credit.
oh, it's
Weekly.
but they do that. Yeah, no, I mean, they do that. They'll sell their business to someone else and then your rate goes to 18%.
well, but looking at that bottom line to know what cash would be available and when he could pay that credit off is important to be looking at.
So that, yeah, like here in April or,
Mm-hmm.
yeah, he's got lots of money coming in April. And May, right?
Does anybody have any other suggestions Bob can do on his cash flow pro forma that might make things a little bit better or different? Maybe you think he's underestimated on something. I would be kind of curious to know why he thinks come March and April he's going to make $32,000 when he's sort of been looking at 25 for the rest of the year. Is there something at the school that's going on those months that he thinks he's going to get more income, or where
March Madness.
March? Oh? No?
Could be.
Parents,
Maybe, yeah.
spring break.
He's not even paying himself a salary at this point.
hmm So that's something that, he wants to know is, can he pay a salary? Do you all, based on this cash flow, would you recommend he take a salary? No, not yet.
That'd be
Well,
very
it's
small.
kind of questionable. I mean, yeah.
hmm
Needs to stick with drinking the coffee for now.
I think he's working at his coffee place. Is that what you guys think?
Oh yeah.
It's like he needs to let go 2 or 3 people and
Yes.
Yeah.
Payroll's really high.
Well, you do kind of wonder. I mean, he's paying $16,000 a month in payroll.
And only generating 25 to 30.
You're not liking that, right?
Or he needs to increase his prices.
Exactly.
You bring up a really good, point. When you're looking, if you can, put in some ratios to sort of see how much of his payroll is the salary, because you guys brought up a good point that's not on here, to kind of give yourself a rule of thumb or to look at each month to know how much is going out in salaries as a % of sales. Some of your flexible, how much of your cost of goods or your inventory are you purchasing as compared to sales? And is that changing on a month-to-month basis, and why? So some possible ideas, which we came up with a lot of these: provide incentives for customers to pay in cash, start catering. Didn't somebody delivering?
Yeah, something.
Selling gift cards, increase the number of corporate accounts, Negotiate with vendors and suppliers to ask for better terms. Talk to the landlord about only paying 10 months instead of 12. Reduce cost, reduce staffing, store hours, and maybe reduce menu options. So, and increase menu options during the busier times. But then account for all of these decisions in your cash flow chart so that you know how it's going to affect your business. And you can kind of play around and be like, I think if this month I do this, what is that going to look like? So, some things not to do. Don't postpone paying your estimated taxes. Do not hide from your loan officers. They can provide advice. Do not pay your vendors late. They can cut off your supply. And it's something as a bank we look at. If you can start paying your vendors later and later and later and later, where's the issue? Do not overestimate your revenue and do not underestimate your costs. So that Goldilocks theory, you want to be just right and in the middle and try and be realistic. And maybe if you're starting new, talk to somebody who's already in the industry to get some ideas as to what their first year looked like. What was that for them, and how did they develop a cash flow projection and perform it to get themselves started? You can also go back to our session about planning a business where we talk about costs and setup fees, so that might help too. Ask for advice and feedback. Seek out expert technical assistance. There's office hours through SCORE. FatPipe has a lot of mentoring opportunities. There's a lot of different things you can do locally. An accountant can help find ways to increase income and reduce expenditures. Your bookkeeper can help you come up with ways to do that as well. And share ideas with other businesses and find ways to compete and cooperate. So that's a great thing about these lunch and learn sessions, is it gives people to sort of bring ideas of what worked for them and what maybe didn't work. That's also important, right? Managing cash flow is a core competency of small business ownership. If you don't make payroll because you don't have the cash regardless of your sales, you're not going to be in business for very long. Opening balance sheet tells a good, compelling story, and cash flow statements continue that story. So it helps you keep looking throughout the year. And then plan for seasonal fluctuations. He didn't plan for his payroll to change over the summer, which could affect for things. And try to maintain a rapid cash conversion cycle. So looking at your inventory, how long is it sitting in the shelf? How are ways you can get your people to pay you faster, and how can you shop for vendors to pay them out? I'm not saying don't pay them or slow pay them, but if they're willing to give you 10 days or 30 days, might be a good way to take it. Manage your paperwork like a pro and ask an accountant for advice. There is a lot of terms in your workbook and a good glossary, which provides things if you have questions: depreciation, equity, fixed costs, gross profits. All of these are in your workbook on page 14. I think it starts on page 13. There's also a blank cash flow template. I also know in Excel they have a lot of templates already set up for you that you can go through. If you type in cash flow in your Excel, it'll just pull up a whole bunch of templates already set up for you that you can tweak to what you need it to do. Negotiate better terms, and there's also lots of resources in your participant guide in the back. Some of them are local and some of them are national, for you to go and seek more advice and specifics about your business. And now if you guys would take the post-test and also fill out the evaluation so I can get good feedback for the next time and make the next class better. Oh.
one more thing you can do to improve, something I
Mhm.
was just thinking of just from my life as an operations manager, is making sure that you've got good employees.
Mhm.
There's definitely things that you can look at to automate, and I don't necessarily mean to like push employees out of your business, but making sure you've got quality employees that you pay really well versus having a lot of employees that aren't great and not paying them well. So finding a balance between automating and employing actual staff, but making sure you've got good quality staff to help balance that out.
Mhm.
So I mean, like if he's paying a bunch of kids who are not doing a lot, that could be part of his overhead issue there.
Right.
Right.
If they're sitting doing homework and ignoring the customers.
Right, like he may be able to reduce his staff, pay them a little bit better, reduce his staff.
Yeah. And he might think in his head that's actually more money by paying them more, but in the long run, it's a
Less
cost.
money, right?
But I have to congratulate Dion. I mean, Dion is really, for as many people are behind that counter,
Mhm.
people really knock it out.
Mhm.
What you're doing. I mean, you don't go in and see a bunch of people clustered gossiping in the corner.
Yeah,
you know,
they're all
drama.
moving.
Yeah, they're really knocking it out.
So
Pretty good.
if
Do we
you
do
leave
those?
that, I would, yeah.
Last page.
Last page, please. Does anybody have any final questions or comments?
I just want to say, like you said, not making it so detailed that it bogs you down, but so that you can track things and know what you're spending.
Mhm.
Because if you don't, even if you think you know and it seems like you're making a lot of money, and it's pretty shocking to realize that, after every little expense comes out, there's nothing left.
Mhm.
So having a good handle on everything that's going out, not assigning that to someone, making sure you know as the owner, making sure you know what's going out, and then fine tuning, tweaking,
Yeah.
and making adjustments.
And you're exactly right. You don't want to put all that detail in the cash flow statement, but you definitely want to create schedules that can feed into that. So if you see a different category there and you say, hey, okay, well, this is an expense. I don't know everything behind it. Let me create another tab in my Excel spreadsheet. Let's break this down. Let's see exactly what it's going to be.
I guess that's the way I thought I was gonna do it and try to avoid paying for access to the other software for a while, because I don't have a customer yet, so it's,
Mhm.
I mean, I have a fear of being bankrupt because there is a diabetes educator that went bankrupt doing diabetes education, and she has a master's of science in nursing. Part of it is, I think it's the way she did her collections of her cash flow, but I can't tell you for sure.
Well, have you talked to her? I mean,
Yeah,
and
goes
she.
hysterical. She works for UNMH now. She's hysterical about it. So
Okay.
it's difficult to talk to her. She's so, it was upsetting.
Well,
And I haven't done accounting in 30-something years. So, yeah,
No.
and I'm really not wanting to spend a lot of money on, monthly costs, because I'm living on Social Security and my 401k, so I have the ability to not pay myself a salary. I'm just wanting income coming in. It's how to tweak it.
yeah.
So yeah, I think it helps to lay it all out, and what you said about, having a great accountant will eventually be helpful for me. Setting up a billing system
Yeah.
to bill the federal government, that's extremely expensive,
And to keep track of, yeah.
but there's a way around it, which I have to sell somebody else to bill on my behalf.
Yeah, I got to ask a question. So when you bill the federal government, can you put terms in there that says, hey, you got to pay me more since you're paying me late?
60
No?
days.
Wow.
For home health care, they pay something called PPS, Prospective Payment
Yeah.
System. They pay in advance, so they pay within 5 days of opening a case, part
Yeah.
of it, and you estimate how much the case is going to be, and then there's a settlement within 60 days. They pay you the rest, or they take some back. And so it's killed home health care agencies. They have to have enough cases
Yeah.
to keep the flow going to pay employees.
Well, are there other opportunities for other revenue streams? I know I look
Yes.
at my business and I look for other revenue streams to kind of supplement that. If you get into a situation where you have the long, slow pays, you have those real kind of quick hitters that can, you know, sustain, keep
Mhm.
the lights
Sure,
on.
you hand me
Yeah.
your credit card and I slice it through my PayPal. No, I mean, you can pay somebody to do anything for you as long as it's legal, right? You don't have to go through someone's insurance or have to deal with Medicaid or Medicare.
Well, and I was probably talking
Right.
more about, you know, doing speaking.
Diversifying the business.
Right.
Exactly.
Right,
yeah.
which is consulting. I mean,
Yeah,
I'm doing
exactly.
some of
More
that
consulting.
right now
Going
for
in
free.
and doing, you know, diabetes counseling with corporations, you know, hitting up other companies and stuff like that. So.
That's how a lot of
Absolutely.
contractors survived, because they decided to go into more consumer work when the commercial bust happened, or they went into more commercial work when the consumer bust happened. So they were able to pivot their business and decide they needed to do different revenue streams because one wasn't working out as well.
Yeah.
So to be
Yeah,
able
I'd
to
like
navigate
list-
that.
I like to list the revenue streams in the spreadsheet and just kind of estimate. Okay, this month I think I can do this. That month I think this will be
Right.
better. So.
Which is how a normal business works, really. You look at marketing, how much business can we bring in? You know, you might do a trade show of your business and then you find out, hey, this didn't really bring me any revenue at all.
Yeah.
It might have met, like Lisa might have met 500 people at a trade show, right? And none of them became tenants of FatPipe ABQ, right? So you have to kind of look at what's, yeah, I'm building my own website, and so consulting,
Mhm.
I mean, I'm doing consulting right now for free as a trade with somebody for them to consult on my business. And this is somebody that has a huge grant that Lisa actually hooked me. I mean, people have hooked me up with various people, and trades don't do anything to my bottom line except give me a track record, right? Yeah, it'd be like you could trade work with me. I mean, I have that MSSB computer. Seriously,
Well-
people, it's not fixable. It's not fixable. People are always on
See, when you say it's not fixable to an IT person,
know.
and she
Ah,
goes,
that's a
it's like, oh,
challenge.
really? Oh, okay. Yeah, let me see that.
Well, the problem is that you can't get all the downloads from Windows unless you have them saved somewhere.
That's true.
We could reload the operating system and then I'll lose everything on
Okay.
it.
It's
Thank you.
Okay, you know, it works fine sitting
Thank
in
you.
the corner. That's what I tell people.
Thank
I'll
you.
just save stuff to disk and move it over to my $300 cheapie.
Thank
It was
you.
a great computer.
This was good. This is my first time being here. So
Well, come back.
I definitely will.
Thank
You
you.
know, you know, this is informative. And